We're coming back right now, though. U.S. interest rates a little bit lower, bonds, notes higher this morning. Equity, I mean, the story is, and this is something that's kind of interesting, doesn't necessarily speak to our case, but we look, we're selective around how we engage with product. And FX is no different than any other asset class. SPOO's record highs yesterday. I think NASDAQ, if they're not there, they have to be within a couple of handles of it. Russell, again, catching up, but still far behind, underperforming. When you see U.S. equities on a tier like that, sometimes you see more compressed dollar markets. Yesterday was a more compressed dollar market. Now, start of the week, Columbus Day holiday, U.S. Treasury cash market wasn't trading. So the bond market was a little lighter in volumes, lighter in liquidity. That plays through some of the other asset classes. So we saw a little bit more of an inside day yesterday, but we're seeing, again, yen come back a little bit, Swiss come back a little bit, Aussie and Canada taking it on the chin pretty hard. Again, Kiwi, it's interesting because we're taking a look at a Kiwi chart right now. It's not putting in new lows, but it's not bouncing either. What this tells me is, and if we go to Aussie, same thing here, but a little bit weaker, and we did probe those lows. So Kiwi still, even with this dollar strength, and remember when we look at Aussie US here, if Aussie's falling, it means the dollar's stronger. Aussie, Kiwi, both at inflection points. Kiwi still holding on a little bit relatively better than the Aussies. And I know I mentioned yesterday, I thought with Aussie lower, we'd see Chinese stocks lower. We didn't see that.
Yeah.
They opened a little bit lower and then rallied.
Yeah.
So they should not always 100. Yeah, you're always proud to call it out.
Well, just a little bit of a one of those mixed bag kind of numbers where it's like the trade balance is bad, but they're going to do more, easing. And it's like leaves for kind of like an unchanged equity market, but a softer currency market. Canada is maybe the weakest of the bunch. And what's interesting, guys, if we just pause for a second and we get the yen out of there, and so we can just go back and forth really quick, is all last week, we're talking about how, Pete, the Aussie, out of not only the commodity currencies, but really the major currencies versus USD, was held in the firmest amid all the USD buying that we've seen so far in October. Now, Aussie looking like, it doesn't have as much of a bounce as maybe this Kiwi does here. Now, this was the weaker one, though, last week. Right. And so a little bit of shift of relative weakness last week in Kiwi, now looking like potentially some relative strength to the Aussie piece. But you throw Canada in there, and I know it's different continents. It seems like a completely different trade. But in terms of the big three commodity currencies here, Pete, Canada looks like the weakest as they just, it's not ripping through 138, but moving pretty smoothly through 138 and looking at those highs that are right here in 138.5 to 139.
Absolutely not helping the cause here, and we know there's not a great correlation. Crude getting hit really hard yesterday in the late afternoon, following through this morning. We're down to, I think, we went 70. We closed $74 yesterday. Again, that was the 2 o'clock. They've got weird closing times, what they mark them at. Starting around equities close at 3, they really hit it. There was a statement from the Israelis that they wouldn't attack oil facilities in Iran. Who knows what anybody's going to do. But that was enough. And we talked about some shaky underpinnings causing this $8 rally from 67 to 76 in crude. We're down to $70. So we're down 4.5%. That, not always a perfect correlation, but when we've got dollar strength, that's not going to stop the Canada from continuing dollar to strengthen relative to Canada. And guys, that's the one thing we're going to continue to drill home here. Yes, the quote looks different. Dollar Canada, it sounds confusing. You're just trading the relationship of two different currency pairs. The beauty is you've got the ability to select a nice slice of pairs to trade different relationships on. So we talk about New Zealand, we talk about Aussie. We can trade, or Aussie Canada, we can trade that pair very easily. We're constructing that. If I'm using ETFs, it's incredibly hard to do, incredibly expensive to do, and the markets are incredibly wide. Can I look at Aussie Canada as a single trade? Absolutely. That's one of the great things of trading spot FX is you can create these currency pairs. So when we talk about relative performance of, and here Frankie's bringing up New Zealand, Canada, same thing too. Very different looking chart, but this is, let's take that dollar component out for a second. Let's just look at the relative value of these two commodity currencies. If that's your venue, I love the idea of I like this commodity currency space. It's interesting to see the macro elements. Sometimes we know there's no one-for-one correlate, but sometimes it drives, sometimes it doesn't. But I like that hook. That gets me interested. I don't know if it's a good analogy or not, but I talk to so many guys. I trade a lot of Apple. I've got the iPhone. I've got the iPad. I really get what they're trying to do. And it's great you find products you love and a company that builds them, but is that really going to determine that you are better situated?
It helps you zero.
To trade Apple stock? Absolutely not. But what it does do is give you a passion and a way into, this is interesting. Same thing here. If you can go through these different currency pairs, start to find things that are interesting. Now, the challenge sometimes is, if you're using futures, they come with a bigger bite. Mm-hmm. These you can scale down to a really small size, which is great. Yes, there's leverage. Leverage, always a leverage product gives you capital efficiency. It's one of the things we always talk about. We can diversify better with leverage because we get more capitally efficient. That carries more risk. We put less up, but we have more at risk. And you can lose more than what you put up, just like with any other leverage product. But New Zealand, this is a great way to, instead of trying to bolt on two products, I'm going to buy one, I'm going to sell the other, get margin on both sides. I can do this in a very elegant way. That's powerful because that lets my ideas go down a more efficient rabbit hole.
Yeah, and I would contend that there's more passion for the general goings-on of the U.S. economy, for example, and how it compares to Canada in this case, but also, I mean, the Euro area, UK, Japan,
Absolutely.
Over the last several years, and especially right now, the first rate-cutting environment since the pandemic, and all the unknowns around how far will the U.S. cut? Will the U.S. dollar still see strength in this cutting environment? Everybody has opinions around what Fed Chair Powell is going to do, what he might do compared to the ECB, compared to the Bank of England. And this is one of the most direct spaces outside of maybe Fed funds futures, which are not a very liquid product, not very retail friendly. But outside of those,
and they're chunky.
Yeah, exactly right. Outside of those interest rate products, this is one of the most direct places where you can gain exposure on opinions of interest rates and everything else, and how they, obviously, you have to factor in how they compare to Canada, Euro area.
Absolutely. And go back to the Kiwi, New Zealand dollar, if you could.
Or you want...
No, I want New Zealand dollar, just because when you look at this fall from 86 cents, this is just a New Zealand US.
That's what I was thinking.
Sorry. The fall from 63.60 all the way down to 60 cents. Now, those big red bars to the downside were when the Reserve Bank of New Zealand cut rates by 50 basis points. And in their commentary, said they were going to be more aggressive. So again, interest rates lower in one country versus the U.S., that currency's usually going to depreciate a little bit. So what this is giving you the ability is to take that same logic around the direction of interest rates in the U.S. and take a little tradable slice around, and the Reserve Bank of New Zealand maybe has a meeting, or the Bank of Canada, or the Reserve Bank of Australia. You can play that same cut and expectations game through all these. And from my mind, it's a pretty healthy run on the fact that they may cut a little bit more aggressively in so the market's marked out almost.
There's a big move.
6%.
Yeah.
Is that 6%? Yeah, that's about 6%, 5%.
Yeah.
But for a currency that moves on average 3.5% a year, 5% in the matter of 15 trading days is a pretty interesting move. So looking for extremes, you can do that. Want to learn more about any of these products? tastyfx.com. It's a great place to go and start to learn about SpotFX, some of the opportunities, product construction, how it all works. Tons of information there. So drop in, take a look. Lots to learn there. But great segment walking through the commodity space, my friend.